The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, happy Treskai Decaphobia. Today is Friday the 13th. I don't know where that thing originated, but I imagine it's in there in Google somewhere. But some people really have a fear of it. A lot of buildings don't even have a 13th floor. Well, they do, but they don't mark it as such. Anyway, that's just one of the superstitions that some people have. I want to share a great joke that we heard here on Tiger in the Tiger Den today. The best time to have a dentist appointment is 2:30. 2:30. Did you hear that? Okay. Supposedly the Knights Templar were taken out on Friday the 13th. I guess that's where it all began. Well, who knows? I don't know. That's way beyond my pay grade, boys and girls. Let's get back to the main thing at hand. Someone's asked me a question by email about why pattern recognition works, and I frankly don't have an answer. I think it's due to the fact that the markets they go up and down because of fear and greed, but they basically go up and down the same way. They can either go up, down, or sideways. That's the only thing that they can do. And they do it in the same format all the time, which is the traditional ABCD Thunderbolt pattern that was first brought out by Gartley in his book in 1937. So that's really what's happening. So what we're trying to do is we're trying to find a spot at point D or point C. Those are the areas where you want to be looking to be either a buyer or seller. If we switch to just go, because we have to cover the euro this morning, but if we take a look here at the euro on a 4-hour chart, you're going to see that we had these big ABCD patterns forming that were quite nice. And you want to sell at point D or buy at point C. And the only time that you don't want to do that is when you have these really wide-ranging bars or gaps or something like that. So that's the main thing. Now, the way to prove this to yourself is if you have a possibility of let's just put up a euro chart right here. The reason why I'm bringing this up to your attention, folks, I'm getting ready to travel to the Ukraine, to the Kiev. I'm giving speeches over there on the 21st and 22nd of May. It's the very first Forex conference that they're having over there. And they've asked me to, along with my good friend Tom Hugard, to give talks on foreign exchange. So what I'm going to do is I'm going to present to them the ABCD pattern. And what I've done here, as you can see, this is the euro on a daily basis without any markings on it at all. And so what I'm going to do is say, okay, this is what we're looking at. I'm going to explain to him what the ABCD is. That'll take about 15 or 20 minutes. And believe me, English is not the second language there, so it's not going to be an easy gig to do. So I'll show him this chart, and then what I'll do is I will totally confuse them by putting up a chart with all the patterns, with the ABCD patterns listed right on the chart, so that they can actually, see them unfold over a period of time. And then after that, I'm going to go into where all these patterns come from and what they mean mathematically and the work of Dr. Lowe and things like that. But since we're talking about the euro this morning, we have a really interesting situation. If you remember when we came in this week, we were looking at the euro at this 114.26 level, and we are now completing another pattern here in the euro. We are within just a few pips of the exact 786 that comes in right around the 113 level in the euro. So keep that in mind. At that point, you'd have a 3 drive to a bottom pattern. You can see that by looking at the 2 yellow triangles. They all measure down to the 113 level. Now, we're having a very strong move down this morning with that long-ranging bars, so that means you want to wait. This is an hourly chart, so you want to wait at least an hour after that price is hit, or you have the second choice of just buying it at point D, which would be around 113 even, and just risking your normal 30 pip stop, which is roughly a little over $350 in the euro. When you stop and think that's a $100,000 contract, that's certainly an acceptable risk. So this is a pattern that is completing that looks very, very interesting. Now we have another pattern that was brought to my attention by our good friend Mr. Z in Philadelphia. And let's just talk about copper for just a minute, because Andy was talking about this with Tom, and Mr. Z has brought it up to our attention. And we'll see the same format here with the ABCD pattern that we're looking at, in the market for copper. You'll notice that we have a move down here that should stop somewhere around 1205. We've been to 1206, and so. But what's interesting here is if you'll see those 2 triangles that are there, you'll notice that these 2 triangles are equal in time and price. That's how you get the ABCD format. In other words, AB equals CD in time, and AB equals CD in price. That's what W.D. Gann talked about when he was referring to squaring price and time together. And also the 61% retracement also comes in at the 207 level. So all of that tells us that copper is probably very, very close to a pretty significant, bounce from this level. Remember, the high was made back on March the 19th, up at that 230 level, and then here we are coming in almost a month later, and we are making a bottom in ABCD format. So this is one you might want to keep on your watch list if you're looking at commodities, because it certainly has a really nice pattern that has really done everything you could possibly ask mathematically and symmetrically, to make it look like it's going to work. That's primarily what we're watching today. One of the questions someone's asked is that Friday the 13th, Treskai decaphobia, that means just fear of the number 13. That's the largest word that I know, and that's the reason I remember it. Whenever we have a Friday the 13th, I even used to know how to spell it, but that's long since past me. So, but I'm not afraid of the number 13. In fact, in China, it's actually a good number, as I recall. But I don't know. Well, that's just whether it's in your mind, whether it's good or bad. Who knows? So we'll wait and see what's going on here with some of these markets. We're going to be a little wake anti-disestablishmentarianism. Yeah, I heard that one, but I don't know what that one means. I know what Treskai decaphobia means, but who knows? Anyway, we're going to take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into the Tiger TV the chart that was given to us by Shane Smolian from wolftrader.net. Way back in January. It's the monthly oil cycle, and as you can see here, it should have topped sometime, around the early April area, which was pretty close to where it did top. I think it was around the 22nd or 28th of March is when it finally got up to that area. But this, tells us that we should be coming down into another area here. We'll try to get Shane on the line in the next week or so to maybe update this, to take a look at it, because this has been a pretty good cycle in the oil. It was basically saying that oil was making a bottom at that time, and that certainly did happen. Remember, everything that we're dealing with here is based on probabilities. There's nothing in certainty in anything, so we want to remember that no matter what we're doing as we're looking at some of these things. So that's the real thing to see what's really going on as we go through some of the things that we're watching. One other question that we had is, I wanted to bring up a chart here of Amazon, because that's become the #1 stock in the whole world, and I just wanted to show you what we were looking at here back in late March. When I was in Hong Kong on the 19th of March, that was the #1 trade that I suggested was to be a buyer of Amazon at that 540 level, because it was making a perfect ABCD pattern at that point, and it was also a perfect 382 pattern at that point. And if you'll take the time to measure the AB leg in time and measure the AB leg in price, you'll see that they both came together. There were 6 days down in the AB move, and there were 6 days down in the CD move, both coming in at the exact 382 level. I came within $1. It actually went $1 lower than the 382, and of course, Amazon is now gone to 730 or whatever it is, and now it's got the attention of presidential candidate Donald Trump is saying it should be in antitrust. Well, I'm sure that the antitrust people that work for Nordstrom's and Macy's and the May Company and any other J.C. Penney, any other normal retailer will certainly say that, because they basically dropped the ball. They didn't call the internet like they should have. Jim Cramer had a really interesting tirade. And he talks so fast, I have to call it a tirade about how they dropped the ball on this, that they really didn't see the potential of what the internet could do. Folks, this internet's been going on since 1996. And if they can't see the potential of what's going on here in some of these things, that's why their stocks are going down, quite a bit. And Nordstrom is getting hit, quite a bit. So, that's the main thing. Yeah, Amazon's trading at 716. There was actually one gentleman in the seminar that we had in Hong Kong that bought some calls. He bought June calls on Amazon, and they were way out of the money. I think they were $600 calls, and they were virtually worthless, and now they're worth a great deal of money. So I'm sure he's a happy camper if nobody else is. But anyway, that's what's happening with the Amazon, and I think it's important that we keep in mind what's going on with that. But the focus today is what we should be looking at, and that's what's happening now, baby. That's the name of the church you want to go to, Reverend Tyrone Pass the Hat Johnson, at the Church of What's Happening Now, baby, because the euro is within a few pips of this 113 level. You watch it very closely, because that's a really nice Gartley pattern. It has a 3-drive pattern, and if you'll notice what happened at the 61% retracement, the market rallied, well over, $1,300 in a matter of 3 days. So this is a shorter term trade, because the euro longer term certainly looks like it wants to go to par, which is 100. So that's the main thing to look at. But this is one that looks really, really interesting from a pattern recognition standpoint. And also I want to reiterate the one on the copper, because that's another one that's going to look very interesting down here at the 205, 206 level in the copper. So, keep that one in mind also. We've had a couple questions about soybeans. All I can say is, this had a heck of a move, and the things are really, going ballistic. But they backed off about 20 cents last night, which is very, very close to the 382 retracement on the long-term weekly basis. But, this is such a contra-seasonal move to see this happening. This has to be related to some type of a currency play or a short squeeze or something, much like what happened to Cook Grain back in the 70s, or something of that nature, because it has to be related to India too, with the monsoon, lack of monsoons that they had there, and they're a big producer of oil, cooking oil. And so this is probably what's happening. So we should get a back off. Now, corn and wheat have moved up, but not nearly as much. They didn't even take out the weekly highs made 3 weeks ago. That doesn't mean that they can't, but they haven't done that, as yet. So we still have time, and believe me, there's going to be at least, one or two other growing problems in these things, before, we're looking at some of these things. I wanted to share one other chart with you that I think is important for those of you that like to look at these ABCD patterns, and we'll look at the chart of the monthly euro going back to 2008, and you'll see the ABCD patterns that are there every year. You have them, and this is why we're looking at this point D should come down somewhere around the par level, and that would be a very interesting spot. It will most probably, if it happens, it will happen the week of the 23rd of June. That's when they have the Brexit, I guess, that they're talking about in Britain, or the possibility of the folks leaving the euro and then we'll see if that is going to be the case. But that's neither here nor there. We'll see if that's going to be, to see what is going to happen. Okay, we're almost ready for our opening here in the next 5 minutes. We should be opening a little bit better than we were earlier in the morning, so that'll be interesting to look at. And the gold market. The gold market's interesting too, and the reason why is the last night's high was at the 1277 level, was an exact 786 retracement of the move down from 1281 down to 1263, and then we rallied back, and now we're backing and filling. Folks, this thing really looks like it wants to get down to the number that Rich Anderson was telling us about yesterday, which is $1,245 an ounce. That's going to be a really interesting number to watch on this level for the gold for a lot of reasons. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking about the Forex markets, and I believe we were getting ready to talk about, oh shucks. No, it was natural gas that I wanted to cover next. Hold on, please. I wanted to get this up here because we've had a nice pattern in the natural gas, And this chart is just a tad late, but we are right up at that, back at that point D again. And if we get back above that, that will set up another area of $2.34. Now we're having a very strong seasonal move in gasoline. It's moving, much better than the crude oil is moving, which is usually a pretty good sign that oil will probably catch up. But remember, the big ABCD in the crude oil comes in at the $50 per barrel level. I've had a question from someone in the den about the Jim Twentyman line. Jim is one of my oldest friends. I've known him over 50 years. He was one of my original brokers in California in 1966 when he worked at Clayton Brokerage there on Wilshire Boulevard in Westwood. After about a year, everybody moved over to the McCulloch Oil Building and became customers of Conti Commodity, and that was where many of the Mike Marcus traded out of there, Jeff Silverman, Bruce Covener. I mean, there were so many guys that were out of that office that it was Jay Crosp. There was just a lot of them that were there. So anyway, the Twentyman line is basically Jim did a lot of work with W.D. Gann, and he noticed how the markets would sometime break out of an area and then come back and touch it, and that's basically what that thing really does. But you don't see it very often. We've seen it before, of course, in the Japanese yen that I've posted many times here at that 106 level. That's exactly what was happening, and we would have that same type of line coming in at around the 1245 level. It was originally 1190 in the gold, but the fact that it's taken gold so long to get down to this level, if gold can get down to that 1245, I believe we have another line that looks pretty good. Now it's just a line that may or may not mean something. You have to have something else there in order to trade the line. Should have a fib point or an ABCD structure, something there that will add to it, because that line by itself, you have to be very, 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 very careful with it. And Jim happens to be, an expert at it, so he's willing to trade right at that line. But unless you have a lot of expertise, you don't really have it. If you have an interest in what that line is, if you'll drop me an email, I've done a little video that I have done for my students that explains what that Twentyman line is. It's a very short 3-minute video that gives you a rough idea of what we're looking at when we see it. But it's a pretty good indicator. Boy, when it works, boy, look out! It really works. So you have to pay really close attention to it. As far as the S&P this morning, we are looking at a overnight retracement up around the 1260 level in the S&P. Remember, this is Friday. This is really, and it's also Treskai decaphobia. So the fact that we were much lower overnight and have rallied back a little bit is still too early to make any type of a idea of what's going to happen on a Friday. But this is a down week on a Friday, so it'd be pretty unusual for the market to have a big up move. That would be my guess of what we're watching here with some of these things, and also with the gold and the silver. I think we have to, in order to be a buyer of these, I think we have to wait until we get to a much better level to look at it. The ones that look the best today are frankly to watch the copper at that 205 per pound level, and then also watch the crude oil at that 113. Now it's a Friday, and you certainly don't ever want to hold a position overnight in the currencies over the weekend. They're open 24 hours a day, 5.5 days a week, and so you don't have to worry about a gap if you don't have a position. And believe me, Sunday night, you could almost always, that's almost a 99% trade, you can enter at very close to where it closed on Friday. And if it doesn't, then you've either saved yourself some money or you've lost an opportunity to make some. But at least you didn't expose yourself to unknown risk, because when the markets are closed, when they open with these huge gaps, that's when you can have the really big problems, much like what we saw in the Swiss franc about a year and a half ago, when they decided to move away from the euro, which happened to be the biggest banking scam ever perpetrated on Forex traders. And in fact, it actually bankrupt, it didn't bankrupt, but it really hurt FXCM, very, very badly, because they had the opposite side of that position and lost a great deal of money. Okay, that's primarily what we're watching today in the currencies. One other currency that I wanted to mention to you that looks very interesting. If you'll give me a second here, I should be able to get it up here without any trouble at all. I should say that, but sometimes the trouble is, there it is. It's the British pound. I think I finally found a way to stack these charts so that I'm able to put them in here. Anyway, you'll notice that on the British pound here, we have these lower tops that have been going on ever since August. You can see there's 1, 2, 3, 4, 5, 6, 7, 8 lower tops. In fact, almost one every month. And as you'll notice, we have a whole bunch of patterns coming together in the British pound at this 137.75 level. And we're trading at, a little above that right now by about 6 points. But this would tell us that if we can get down to that level sometime around that June area, June 23rd, when we have this Britain's vote on the Brexit, then that might be a good spot. But until that time, it's best to be a seller of the British pound, because it certainly has had lower tops, and the trend is certainly down. And remember, you define trend by, if you have lower tops and lower bottoms, you're in a downtrend. If you have higher tops and higher bottoms, you're in an uptrend. And if you want to know what the trend is, you have to ask yourself, what time frame are you looking at? Because a daily trend will be different than a monthly trend, and an hourly trend will be different than a daily trend. So you have to know what time frame you're looking at if you're watching these things. So that's the key to watching what you're, what you should be looking at anyway. So that's the primarily what we're taking a look at right here. And let me see, we had one other question. Oh, question about Apple. That's a good one. Just a second here. I have some interesting information on Apple that they've asked me to take a look at, and I know I put it here. Where is it? Oh dear. Well, guess what? I've lost it. Doggone it. I know. Anyway, Apple looks like it wants to go to the 82 to 78 level in Apple. Wow.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're having a nice little rally so far this morning. We've turned around from being down to being up in the S&P, also in the NASDAQ. But the key to watch, folks, is to keep an eye on this euro. I've just posted it into the room to look at it at this 113 level. We're trading at 113.07 now, so we're coming down, quietly, which is what you'd like to see. That could change in a heartbeat, of course, but keep an eye on that one, because that should be a pretty good pattern completing. We have a 3-drive pattern. We have a 78% retracement Gartley pattern. So all the factors are there. That doesn't mean it's going to work, but it worked on the sell side. Maybe it'll work on the buy side. So we'll wait and see. All we were doing on that was we were selling that lower top, which was a 78% retracement back, and now we're coming down to the expansion to that on the downside at 1.618 and the 786 and the ABCD. So in pattern recognition lingo, the euro has just about everything that you could possibly ask. Very similar to the same pattern that we have in the copper, only the copper, of course, is a metal and not a foreign exchange instrument. So that's the main thing that we're looking at. So we'll just keep that in mind very, very soon. We just hit 113.02, so we're only 2 pips away, and we'll see if that's going to be it or not. But at that point, your risk is relatively small, and we'll wait and see what happens with the rest of it. So that's what we're watching here right now. Oh, by the way, on Monday we're going to have Dr. Al Larson back. He wants to tell us, what he's doing. He's got a new course that looks really interesting for those of you that have an interest in astrology and cycles and stuff, because he's a very, very smart fellow. And if you get a chance, you should go to his website and he has a clinic every Friday. It's called the Chaos Clinic, and it's money. Go to www.moneytide.com, and it's based on the lunar cycles that he looks at, based on some of these electromagnetic things. But he's going to be our guest on Monday. On Wednesday, I'm going to have another guest from way back in the old days at the Chicago Mercantile Exchange. Dale Pinkert is going to be on. He's a foreign exchange expert out of San Diego, and he will have some pretty good information for us also. He doesn't have anything for sale or anything. We're just going to talk about the markets in the old days and try to give you some information that you might be able to use. But his specialty happens to be foreign exchange, and that is becoming bigger and bigger in these markets as we go through. Regarding the Japanese yen, we've been up here at this 109.40 level now for 3 days. We've not been able to take it out with any gusto as yet, but it's still, rather early. So that's the main thing, to keep in mind of what we're doing. So if you bought the yen down there, or the euro at 113.02, the low was 01. You've made 7 points, 8 points. You bought a nice turkey dinner for yourself. So stop complaining. So we'll take a look here. We've got a question here about the Treasury bonds. And Treasury bonds have a potential for a 3-drive pattern on the longer term daily pattern, coming in about that 167 level is what it could be looking at. So that's another one that we want to watch with a little bit of interest, because that is related to foreign exchange. So they all fit together more or less, and we'll see how they all end up. Anyway, that's what we're looking at. Anyway, these patterns, sometimes they work, sometimes they don't, folks, and you have to take the responsibility of being able to decide whether you want to be a buyer or seller at any particular time. The only thing you can quantify when you're trading is your risk. You never know how much you're going to make on a trade. You never know whether you're going to be right or not. So the only thing you can focus on is the risk side of the risk-reward equation, and that's the key, to what you should be looking at, in my opinion. And of course, opinions are like armpits. Everybody has one, and it usually smells. So be careful of what you hear. Be more cognizant of what you see. Trade what you see, not what you hear. That's what we like to say here at TFNN from Clearwater, Florida, in Suite 618. Anyway, this is what we're going to be looking at later in the day, is how the market is going to close today, because we're had a minor down week thus far, and we're in a really tight trading range, as we've seen before. Last night, the S&P futures tested the low down around that 1248 level. We couldn't take it out, whereas the NASDAQ did move a few points below the previous day's low, and then immediately turned and rallied 50 handles. So there's still a lot of scared shorts out there, and there's also a lot of scared longs. So we're going to see some interesting volatility in May. I think if you have a portfolio, you should really listen to Tom O'Brien's special that he has tonight, I believe, on the sell in May and don't make hay, or go away, whatever it is. Sell and make, go away, why it's important this year. And that is a very strong cycle as far as a historical cycle in the market. And not only that, but it lines up with some of these astrological things that we've been looking at, with Mercury, going retrograde on the, I believe, the 28th of April, and it goes back direct on the 20th of May. And we will have Norm Winsky on at that time. I believe on the 19th. We're going to have Norm on the 19th, and we have a full moon due at that time on the 20th, I believe. And then we have Mercury going retrograde, coming back direct. So he's got some interesting information for us. So we certainly want to keep an eye on what Norm Winsky has for us. So that's what we're looking at for next week. And we'll see how it all lines up. So anyway, these are the things that we're keeping an eye on today. We've already rallied about 15 points off the bottom in the S&P. The main thing to keep in mind that if you look at the cycles of where we're still in a downtrend, because we've had lower tops all this week, ever since the 10th. That was the beginning of the week, and we've been down all week, and each of the highs have been lower. And the next number that you want to pay close attention to is 1265. We could possibly take that out by a little bit and maybe get to 1268. I don't think we're going to get much higher than 1268 today, but that's my opinion again. And all I'm doing is I'm measuring, what the last swings were. Those would be equal swings, taking us up, about 15 points from the bottom. So those are the things that I'm keeping an eye on early in the morning on this Friday. So those are the main things that we're looking at. As far as the gold, we have to wait. We had a chance to really get out of here in gold yesterday when we got to 1282. That was a 61% retracement, and it failed miserably. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, to wind up the week, I've posted the chart from our good friend Jim Bartolioni. This is the chart of the New York Stock Exchange Index going over the last 15 years. You can see the 5-wave expanding triangle that is there. We've also are doing exactly what happened in 2007. We had a pretty good break, and then we rallied back to a 61% retracement, which we did a week or so ago. And unless we get this S&P above 2110, it certainly looks like this market is ready for another move to the downside. So that's on a longer term basis. I would certainly urge you to protect yourself if you have your 401ks and things that you're heavily involved in stocks, because once they start down, they have a tendency to not take any prisoners, and we don't want you to get locked into something that can really hurt your financial health. So just protect yourself, because these markets are going to get more volatile. This quantitative easing thing is going to go into the history books, in my opinion, as being one of the biggest PUFAs of in the history of financial stuff. And it is a giant experiment, folks. They have no experience with this at all, so they're going by the seat of their pants. So just keep in mind that that's what you're doing. That's what you're dealing with. We just hit 113.12 in the euro, so that's up 12 ticks, and so you should have made $100 on that, $120. So you got yourself a nice surf and turf for tonight with you and your significant other. So I don't know if that's going to work or not. All I know, it's doing what it's supposed to be doing, folks. That's all it is. I don't know anything more than that. So these are just patterns. Sometimes they work, sometimes they don't, and you've got to be able to take the responsibility, for your own trade. So keep that in mind when you're doing this. That's the main thing. Try to listen to Tom's show tonight. It's a terrific deal. He's got great information. And that's it. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.